Back to Market on Close. I'm Sam Bartis on the floor of the New York Stock Exchange. Joining me now here on the floor to talk about precious metals is George Noble. There he is, Managing Partner, Noble Capital Advisors. George, it's so nice to have you around the desk. Thanks so much for your time. All right, well, we haven't touched much on it in the show, obviously, because there's a couple of other things going on. But, I mean, these moves in the metal space have been notable. Obviously, we've got this weakness in the dollar. We're seeing gold, silver, copper, palladium, platinum all pulling back today. But just talk to us about that price action we've seen. Why is it so volatile to start 2026 after basically just going like that for 2025?
So the speculators, the DGen crowd, they've migrated from Bitcoin. They adopted SLV and GLD as their meme stocks. Mm-hmm. And silver, as you know, is a much smaller market than gold. So that seems to be the object of choice. Easier to push around, easier to make money. Mm-hmm. So you've seen a decline in volatility in Bitcoin, but conversely, the action, if you will, is now in the precious metals. And there's so much liquidity out there sloshing around, it's going to find a home. And so thank you for having me on the show. I've been on a couple times in the past with Nicole and with Diane. Yeah. I remember I was here in April of last year, and it was a week when the metals had a big dirt nap. And so Diane saying, "Oh, so do you think it's over?" And I said, "The only I think it's a bear market. The only bull market I see is a bull market, and those calling the end of the bull market for silver and gold." Mm-hmm. It's all a long way of saying people get so caught up in the daily volatility. Zoom out, though. Look at the bigger picture. Look at the trend. So I don't really pay attention to it on a daily basis. Avoid the hot takes is one of the things I firmly believe in. Mm-hmm. And, the fact of the matter is, I like to joke, gold and silver have now crashed to levels not seen since 3 weeks ago. But, I think gold and silver are still up like 18 or 19% this year. Yeah. So look at the big picture, look at the trend. Do not pay attention to the daily volatility. And by the way, you want to really blow your mind? I think there's a chance silver is going to go up so much more than anybody thinks. Mm-hmm. So it came out the other day, I don't know if you caught this, but I think it was midweek last week. Silver had that really bad dirt nap. It had the first big down, then it rebounded. I think it was one day it was down like $15 or something like that. Well, I'm sure you saw the story. There was a story out that one big Chinese speculator had come in a really loud fashion to push the price down deliberately. Mm-hmm. So here's the thing. It worked in the short run, but now we know there's a big short in the market.
Right.
And I was reminded in 22, I think it was, a similar thing happened to the price of nickel. Mm-hmm. The Chinese investor came in a very loud way, pushed the price down. He wanted to be known he was short. Right. He pushed it down, it went down. You can't exactly pick the bottom, but Sam, once it bottomed, it tripled.
Okay.
So I think silver, look, people want to know is it going to 100, 150? I don't know. I just think it's up, and I think people are actually going to be surprised by how much it goes up. And I think what you saw the other day was the Johnny-come-lately, the tourists jumping in, the macro tourists who don't know what they own, getting flushed out.
Interesting. Okay, I know you touched on the macro tourists. I've heard that before. But, getting back to China, obviously it's been a source of what we've seen on the way up with gold because of that aggressive central bank buying. I think the PBOC out on the weekend, say 15th month. We know that, of course, is coming from that very structural driver. And we know the reasons behind that as well. But then, of course, on the silver, as you mentioned, perhaps with these short sellers as well, we know that China has, often tried to shake the speculators out of the tree. We've got some margin calls as well with respect to that market. But I want to touch on something you said. You believe that silver is going to keep going. And why? Because I'm fascinated around this because this is where we're seeing the use cases for your renewables, your EVs, the AI data centers that we speak about every day.
So what you have to worry about, there's two sides to every argument. What you have to worry about is if the price of silver goes up so much that you get substitution, people stop using silver and use something else. Mm-hmm. Okay, so for instance, if you look at semiconductors now, it's different, but a read across. Mm-hmm. The price of chips has gone up so much that you're starting to see various companies that use the chips for things saying, well, they're going to have to raise prices a lot, or they'll have to find some other way of making the products, all right? Mm-hmm. So the tricky thing about silver, it's got an industrial demand to it, which you just mentioned.
Right.
Aside from the store of value, and so for instance, your point about China shifting over to solar as an example, okay? Mm-hmm. They're going to keep doing that regardless. It's like a national imperative. So they're really price insensitive. And as you know, the Chinese are some of the great wealth redistributors of the world. So as Yogi Berra famously once said, predictions are difficult, especially about the future. But if you say, where's silver going? To steal the line from my Bitcoin friends, number go up.
Okay, we bounced around a lot from Yogi Bear to China. I just want to get your overall take then on what we're seeing in these markets as far as this rotation. I mean, a lot of that broadening out has been into the picks and shovels, away from technology, into international markets as well. What do you make of that? You know, over the span of your career, what you have seen, what do you make of the markets, what they're doing today?
I've seen this movie before, most notably with Japanese subtitles, also with American subtitles. I cut my teeth at Fidelity running their first international fund, a Fidelity Overseas Fund. There was a time in the 80s, you'll remember this, I'm older than you weren't around, but you've read about this. The Japanese market was a cat's meow, it was all the rage. The Nikkei, the Japanese stock market, got up to 2/3 of the non-US market cap, IFA. And at that point, if you didn't own Japanese stocks, you had no way of performing. It didn't matter if Hong Kong was doing well, it was like 1 or 2% of the market, who cares? Japan was on 60 times earnings, the financial stocks, which were leadership, were on 100 times earnings. These are banks, 10 times book value. But the number kept going up, right? And so, but eventually the song changes. The Japanese market peaked at 39,000 on the last day of 1989. And for the next 25 years, all you had to do was get out of Dodge. Just sell your Japanese stocks and buy something else, okay? So what I'm here to tell you today is I believe, I'm not likening technology stocks to moribund Japanese would-be bankrupt banks, but what I am saying is the Mag 7 and the US technology stocks have sucked all the air out of the room. You know, the 35% US market cap, US got up to, what was it, 70% of global market cap. It was the greatest story in town, maybe the only story in town. But now in the last year or two, as you well know, you've seen reflationary policies adopted elsewhere. You're starting to see growth pick up elsewhere. And so before it was like there's tech and there's nothing else. Or looked in the U.S. market, you know, there was the Mag 7 and the 493. The 493 did nothing. The Mag 7 was the only game in town. Now I think what's happening on the global stage, money is going to migrate from tech into the 493, migrate from the U.S. into other markets, and so you know it's been hard for stock pickers the last few years. But I actually think this is going to be the year when it's going to be so easy to beat the index. Just as in 1990, it was so easy to beat the IFA index. All you had to do was avoid Japan. Look at what's already happened here today. I'm not making stuff pies in the sky. I looked quickly before we came on. I think the Russell's up 8, S&P's up 2, Nasdaq's flat on the year.
Well, the Nikkei 225 hit a record overnight. It's up over 10%.
My beloved energy stocks are up 20, 30%. My miners are up 20, 30%.
Right.
It's like, and so everyone's stuck because they bought this story. Look, these are great companies, don't get me wrong.
Yeah.
But the index funds have passive bid the whole thing. So I think run, and in fact, actually, if you want to talk about it, we all have to talk about it. I think the tech stock could be an absolute disaster. It's not just underweight. I think they could crash if you want to talk about that.
George, we're going to have to get you back to talk about all of that again soon because we have completely run out of time. But thank you so much for stopping by. It's been a fascinating one.
Thank you for having me, Sam.
Really appreciate it. George Noble, their Noble Capital Advisors.